Let's dive into global governance in time of regulatory uncertainty. We're in Europe, right? So it's a good place to talk about regulation, because if you've listened carefully to the talk since this morning, we like to regulate in Europe, right? Please welcome our three guests. Nicolas Lefevre-Marton, bonjour. You're Chief Strategy Officer at ENGIE. Mairead Lavery, coming from Canada, President and CEO of EDC Export Development Canada. And Adrien Couret, CEO of Aéma Group. Let me give a very quick introduction, a very quick portrait of your respective company. Mairead Lavery, your company is the Canadian Export Credit Agency. Adrien Couret, you are the CEO of a French mutual insurance and finance service group. Aéma, you probably know, but you maybe know more the brands like Massif, Aesio Mutuel, or Abeille Assurance, or Ophi Invest for maybe the Europeans in the room. And Nicolas Lefevre-Marton, Chief Strategy Officer at ENGIE. We've heard your boss earlier today. ENGIE is a global energy and service group. Well, I was joking saying that Europe likes to regulate. This is not a funny subject, right? I'd like to maybe start with you and ask you very simply, what is the primary impact of regulatory uncertainty on your respective business? And maybe let's start with you, Mairead, as a woman, and since we're in France, I have to be very polite, right?
Okay, thank you for that. Merci. C'est un grand plaisir d'être avec vous.
It's a great pleasure to be with you today.
Because I'm going to speak of it from two angles. One, as an export credit agency. So perhaps my equivalent is BPI France, Euler Hermes, just so that you maybe situate me in the European context. And then what it means actually to Canadian companies, because I think that's probably the most important. So as an export credit agency, and it's very important that I'm here today at the OECD. Those are in fact one of the most important regulations that export credit agencies follow. And it's a really good example. All our exporters want is a level playing field. They actually want to be able to trade internationally with rules and regulations that are the same for all. So something like the OECD is what provides that. But when you get to uncertainty or late regulations, that was what is really harmful to companies. So being here, I'm delighted to say that in the last couple of years, and just recently, the OECD approved what is known as the common approaches. And that sets out the due diligence that companies need to do across the board. And that's really important, because if someone is playing by different rules, they're immediately disadvantaged. So it's more about actually having current rules as well as very clear rules. Now, when you come to companies, it's a really different ball game. So for Canadian exporters, what happens when you don't have regulatory uncertainty or certainty is actual lack of investment. Because they don't know where to invest, they don't know what the guaranteed return will be, and particularly when you're in large capital-intensive projects, they don't know how long they're going to be in that period of uncertainty, and that means there's no return for the risk that they are taking. So in general, what regulatory uncertainty does is slow down investment, and particularly when you think of today and green transition or climate action, that's incredibly important, because the projects that are needed today are those really large, intensive capital projects. And the minute you slow that down, you're never going to hit 2050, you're never going to hit climate goals. So that's probably the single biggest challenge that we have today, is the slowdown in investment.
Slowdown in investment. What about you, Adrien? What is the primary challenge your industry is facing?
So I'm talking from a specific angle, which is an insurer in France, but also impacted by the EU regulation. So regulation is important for us because we are a highly regulated sector, because we take long-term commitments to policy holders, and because we invest in the long term for the economy. And we've got two levels of regulation, the local one and the EU one. And what I have observed in the last decade is the increasing burden of EU regulation at a level that we have never known before, And it has really become an uncertainty for us and for our sector. And there are three characteristics, general characteristics of the way the EU regulation has evolved. First, from what we observed as insurers, it's more and more disconnected from market reality, both the customer's needs and the needs of market players. There are so many different regulations coming from Europe, whether they are specific to insurers or general, like all regulations coming from cyber, digital, and IT, that it frequently occurs that these regulations are contradictory, not consistent. And so we have many questions coming from how do we implement, how do we do throughout these contradictions. And third, most of these new regulations, I'm sure I will take examples in your coming questions, become contradictory with the purpose of our business. As insurer, we have two purposes. The first is to close the protection gap, and that needs specific technique, such as mutualization, risk pooling. So it's very demanding, and we now have regulation that hinders this type of aspect. And we are long-term investors, and as Christophe Bavière said in the previous conference, we have many rules that hinders a long-term investment for whole big institutional player, such as insurers. So regulation has become an uncertainty for us, which is quite contradictory, because we could expect from regulation that it lowers business uncertainty. And now we don't really know how it is made, how it will be implemented, and how each regulation fits with one another.
Navigating ever-changing waters. Nicolas Lefevre-Marton at ENGIE, what is, from your vantage point, what specific issues is your industry facing?
Thanks for the question. So ENGIE is an energy transition company. So we operate in 30 countries. We're active across all of the levers of the energy transition, from production with renewables, with green gases, also in the space of flexibility with thermal assets, pumped hydro assets, with batteries, also in networks and infrastructure, as well as with clients, so helping businesses and individuals. And so energy in itself is a very regulated market. The energy transition is a even more regulated market. So to some extent, regulation and regulatory uncertainty is our day-to-day work. And I think you've said it pretty well. What it does, if there's too much uncertainty, is that it will make us hold back investments in these different activities. It could also increase the price through this uncertainty, so make it more costly. And it could make us look to diversify and to go maybe invest in other places. If we take a very concrete example, which is a very significant and large example, in Europe, there is a planned ban on the sales of internal combustion engine vehicles, so which use gasoline or diesel, in 2035. There's a lot of talk right now around, well, maybe we should postpone it by 5 years, let's say, or postpone it by a few years. That regulatory uncertainty has a massive impact, not just on the car companies, but on the energy sector as a whole, because you need to produce that electricity which goes into these vehicles. To give you an idea, if we were to postpone it by 5 years, that would be roughly equal to 100 gigawatts of renewables. Just to give you a comparison, today we have roughly 500 plus a bit more gigawatts installed of solar and wind. So it's a huge impact that uncertainty would have in terms of delaying, to come back to your point, delaying investments in renewables, for example.
Nicolas, let me stay with you for one more question. How do you at ENGIE ensure consistent progress toward sustainability goals when there is no unified international climate policies?
I don't think you can use the fact that there's no unified climate policy not to move forward with your climate objectives and our mission at ENGIE, which is fundamentally to be a catalyst of the energy transition. there is, after all, a lot of very useful references out there in the world. The international institutions such as the OECD, which has contributed, have created a framework which we can use. So, for example, from a science standpoint, the IPCC has created a very solid scientific foundation. From a policy standpoint, the UNFCCC, with the Paris Agreement, has created a very clear framework. For corporations, SBTI has created a framework which we can operate with to set targets and be accountable for them. The Greenhouse Gas Protocol has set the framework for accounting. So we're actually very confident for ENGIE. We have an objective of being net zero by 2045. We have an SBTI objective, and it's part of our business. As I said, it's part of our mission. So I think even if we don't have that framework, we can be very confident in achieving these objectives.
Can I jump in on this?
Sure, Mairead, go ahead.
Because I think there's another angle as a capital provider, because EDC does have $70 billion of assets under management, and we are an insurance company as well. So both of us are in the space of climate risk. So physical risk and transition risk. So notwithstanding the opportunities that are there as capital providers, we have to think about the risk associated with the assets that we're in today. And if I take your example, Nicolas, of a change from carbon engine to an EV, well, that's a huge risk to the assets that you're investing in today. So even in the absence of climate policies, you have to be looking at the assets on your balance sheet and determining, are you staying in them? Are you getting into them further? Or are you turning your mind towards green assets and what will be the future, even if it's uncertain as to when they will have the regulatory backing?
Shall we talk about your products? You guys have clients, right? I was wondering how this regulatory uncertainty around emerging risk, we just talked about climate change, so let's stay maybe on that, affect your ability to price risk and design product. Maybe Mairead, if you want to start.
Yeah, absolutely. It impacts the design of products. It also impacts where we would advise Canadian companies to consider investing in. So I think it starts there. Where could there be regulatory certainty? I think everyone on this morning has talked about the Inflation Reduction Act. Up until a point, that created certainty around the US market, and it saw a flight to safety. It saw investment dollars going to the US jurisdiction. In the absence of that, or indeed if we talk about the EU, given that I'm here, and perhaps over-regulation, that also, whilst it might be more certain, the regulation, the over-regulation can actually detract investment as well. So as you're thinking about designing products, you're thinking about for which market, who's going to actually use them, and then you're trying to determine to your point, the actual risk premium that you're attaching and the pricing that you're going to attach to those markets. It's a very simple equation, and we saw this with renewables. 10, 15 years ago, renewables were attracting higher risk investors because the return was higher, because, the costs were certainly higher, but no one was quite sure what the future looks like. Today, that's a very safe bet in terms of cost and in terms of return. But what we don't see, and perhaps I'll pick up on the energy example, is enough investment into even newer sources of energy, whether that's hydrogen, whether that's the big capital cost of nuclear. There's a lot of challenges. Therefore, many of us are looking to see how we bring public and private sector finance to the table to actually mitigate some of the risks and make it a return equation that actually attracts investment.
Adrien, Couret?
Yes, the question is really key, because we are an insurance group in France. We are covering 11 million people in car insurance, home insurance, company insurance. So facing the transitions is key for us. How do you design and price risk towards climate change, aging population? To that prospect, regulation could be a stabilizer, for instance, in promoting long-term investment in transitions, or, for instance, in favoring risk pooling not only at a national level, but also at a European one. What we observe, nonetheless, is that the mindset of EU regulation is still against the current of history. I would like to take the example of one upcoming regulation in Europe, which is huge and is to come. Its name is FIDA. It's the short name for Financial Data Access, and it aims at opening up private financial data of EU citizens to any operators, non-financial and even non-EU operators, so that these operators may propose supposedly better coverages for EU citizens. But in fact, it jeopardizes and fragilizes EU insurers. First of all, because there is no demand for such evolution at the European level. There is no French policyholder saying that he would like to be insured by a Latvian, Hungarian or a Spanish insurer. Second difficulty, it's contradictory to the goal that is well defined by the Draghi and Letta report of better sovereignty in the economy, because it opens up the insurance industry, which is key to the sovereignty of the EU, to American, Chinese or GAFAM. So it could really hinders our industry. And the third aspect, it is contradictory to the purpose of our industry, because the more you open the portfolio of policyholders, the more it's difficult to build a mutualization, a pooling of risk, and the shorter the duration of the investment portfolio becomes. So it's more difficult for insurer with this regulation to invest in the long term, in transition, or in accompanying an aging population. So I insist on FIDA because it's really archetypal of a regulation that is quite bureaucratic, which is not rooted in a real need of both the customer and the economy, and will generate billions of euros of IT investment that will only be used to have more fluid insurance market. But what we need, it's not the fluidity of the market, it's the strength of the market to face all the challenges that are to come, especially on the climate transition.
We need the strength. Do you agree, Nicolas? The strength. This is what's missing in Europe.
Of course, I agree, especially around the energy transition policies. I think all of us, and this is a very known fact, we are looking for having clear framework so that we can invest. Energy investments are typically long-term, so they're multi-decades typically, and so the clarity of that regulatory framework allows us to invest in a lot of confidence. That's unfortunately not quite the reality, and so we have, and it's part of our day-to-day job to manage that uncertainty.
How do you balance global government standards with local regulatory compliance in markets with conflicting rules? How do you do that, Nicolas, and your team?
I think fundamentally you need to have regulation happens at all different levels. So there's multilateral institutions that we talked about a little bit before. There are national governments and there are the local players. And I think we just need to appreciate that granularity. And so the way that we address this is first recognizing that we are truly in the same boat. So our mission is to achieve the energy transition and to be a catalyst of the energy transition. All governments want the energy transition to happen. We know it's not that simple. And so we provide advice and based on our experience. And so there is a notion of partnership between the private sector and governments, particularly on this topic, because we need to be very humble and recognize that it's complicated. And it's very complicated for governments. It's complicated for us as well. And so sharing that knowledge, and we do this by having people on the ground which really work with governments, both at national level and local level, to provide that experience and try to find the right solutions together.
Mairead, we're all on the same boat.
Yeah, we are. It's very challenging. Perhaps I can use the Canadian example, because you're absolutely right. We have federal regulation, then we have provincial regulation, then we have municipal regulation, and somewhere in there's a Canadian company or indeed a foreign investor into Canada trying to build a project. So it's incredibly difficult. And I think as companies look to invest, they're certainly looking to try and find jurisdictions where they can understand and have clarity through all of that regulation to determine where they actually should invest. But I think one of the things that the regulators, so there's no shortage of regulation, but what we don't see sometimes is the collaboration among all of those jurisdictions, and we actually don't see regulation that goes across the value chain. So given that Nicolas is here, we'll take energy as an example. And if you just go to the basics of the materials needed for energy, for generation, so we'll take critical minerals, going through to power generation, going through to distribution. Regulators tend to provide regulations for each of those separately, when in fact you can't distribute electricity if you don't have regulations that support it in the generation space, and indeed then right back to mining and deriving the critical minerals. So yeah, I think we've got to find a way, particularly when you put ourselves in the green transition mode, to find a way for regulators to understand there's a value chain. There's a value chain for companies that play across that, and you need to find a way to enable them throughout that. And I think if we get that, we will see faster progress on projects, whether they're in the energy space or indeed in other industries.
Nicolas, looking ahead, what do you see as the biggest government challenges in the energy sector, in particular, as some countries are prioritizing energy security over decarbonization?
So I think first, opposing energy security and climate change, I think, is a mistake. I think we just released recently a long-term scenarios for the decarbonization of Europe, and you can see that the decarbonization of Europe entails an 85% reduction in fossil fuel imports, which is a very good KPI of some of the energy security concerns that you have around energy. So opposing the two, I don't think is constructive. I think, in fact, there are a lot of synergies. But to come back to your core question, fundamentally, I think we've done tremendous progress around the electrification of much of the industry, so around developing renewables, developing EVs, also developing batteries. But I think you need to look at all the solutions which are needed in the long term to achieve decarbonization. And we know that there's a new wave of technologies which will be necessary. Particularly, you mentioned it, around hydrogen, around green gases, around really helping industry to transform, heavy transport to transform. And so I think we need to not be too myopic. We've done great progress, but there are long-term challenges. And so we need, as governments, and that's the biggest challenge, I think, to continue to help develop and bring to maturity these solutions and these transformations which are still necessary.
Mairead, can you tell us, from your Canadian point of view, how is your organization collaborating with your peers and industry counterparts to advance at a fair and level regulatory playing field?
Yeah, thanks. And I'll maybe start my answer by also picking up on your last question, because I think one of the biggest challenges that we face is this polarization. It's either good or bad. It's either green or it's not. And we had that conversation just on one of the earlier panels today around greenwashing and around all of that. It's one of our single biggest challenges because it's not that simple. There are very nuanced industries at work here that we need to understand. It is a transition at play, and therefore when I think, to maybe answer your question, how are we thinking about it, it is to demystify what actually we are doing. It is to demystify where we're investing. So we've worked very hard with other players to come up with sustainable bond frameworks, to be very clear about what sustainable financing means to us at EDC. We're working very hard with the regulators that we work with, including the OECD, to ensure that the rules are transparent and that they work for companies, to your point, that they're not just a bunch of regulators sitting in a dark room thinking, how can I make this hard today? But that there's actually companies, and that the company input is going into these regulations, because they are the people who have to implement them. And maybe I'll end my comment around how we're trying to help, is to help our companies understand how to implement these regulations, because that is a huge cost to companies, actually building the compliance frameworks, building the staff. And if you're a mid-sized company or a small company, you have no chance without the help of other entities that can actually translate that for you.
How could you be helped? Adrien, Couret, what do you wish for Christmas?
Yes, Christmas is soon. And just to rebound on your remark, the staff from our compliance teams has doubled in 10 years. So it's really.
Has your team doubled as well?
No, I mean in proportion. So what could we have under the Christmas tree? Maybe a more collaborative approach to regulation between regulator, supervisor, and I mean all the representatives of civil society, including, of course, companies. The first reason would be what you just mentioned, is to stop the absurdity of implementation that we face and which are detrimental for our activity, our purpose, and at the end of the day, in the competition with other continents. But the second reason, the more positive one, is key. As insurers, we face systemic changes that cannot be solved only at the local and national level. And for instance, in France, we have very efficient risk pooling between the private and the public sector, which is called the natural catastrophe regime. It's specific to France. It also exists in Spain. It could be very useful and relevant to think of a regime that would pool the risk within Europe, because you've got droughts in France, you've got floods in Germany and in Central Europe. So it could be a very positive and constructive and meaningful for the citizens to build such regulations. So we should be more collaborative to build positive regulation that open spaces instead of forbidding or closing opportunities for us.
Nicolas, do you want to react?
I think I've said what I would be looking for under my Christmas tree, a more long-term view on the solutions that are needed.
Let's have a word about geopolitical tension. Do geopolitical tensions play a role in shaping your governance? Does it have an impact? Maybe Mairead first in Canada.
So let me start with EDC and then I'll come to Canada. So absolutely. I mean, we support Canadian exporters in 160 countries around the world. So yeah, geopolitics really matters. But you have to remember the Canadian economy, 75% of Canadian exports go to the US. So what an interesting time it is, particularly given President-elect Trump's statement of 25% tariffs to his two NAFTA partners, CUSMA partners under the Free Trade Agreement. So yes, geopolitical tensions really matter. I think they have been driving, certainly in the last year, 18 months, as people look towards the US election and the election result, different actions by Canadian exporters. They were looking to invest in the US as a hedge to actually being able to trade with the US. So geopolitical tensions really do matter, and they change investment patterns. So I think that's something that everyone's considering. I know there's just been some recent articles in Canada around the EU and how the EU will react to the challenge presented by the US. I've just spent the last month pretty much in Asia, and there's considerable discussions around the bipolarity of the US and China and how different Asian nations are thinking of handling that. And you look at some what might consider developing economies such as Vietnam, who are taking an incredibly nuanced approach to the geopolitics of working with China, given that they're a China plus one country, as well as working with the United States. So I think many of us in developed markets could actually look to our Southeast Asian countries and indeed some Asian countries for guidance and advice, because they have been navigating geopolitics in an incredibly astute way, not for longer than we have, but I think the reality is on their shores. It's in the South China Sea every day. It's in their actual performance of their countries in a way that we haven't had to deal with for a long time. And I think they can actually help guide us as to how to manage in this bipolar world.
And Nicolas, at ENGIE, you also navigate different rules in different markets. How do geopolitical tensions affect your business?
Yeah, so it's a very important effect. I mean, the energy markets historically are global, so that's certainly true for oil markets. It's also true for gas markets. Increasingly are regionalized for power, for compliance market, and so on. So geopolitics has a very important impact on these dynamics. At ENGIE, like all energy companies, we have a pretty strong global energy management scheme with very clear risk mandates and how to manage that. And so that really is, and that was, of course, absolutely at play during the Ukraine crisis, which all of a sudden there was a very significant impact on gas supplies. Luckily, thanks to that risk framework, we were able to manage that diversification because we already had a strong, diversified long-term gas contract setup. But that was geopolitics at its worst, really. But I'd like to point out that there is an evolution. This is almost a historical geopolitical impact in energy, these global market dynamics. But increasingly, there's the geopolitics of the energy transition, which really has only emerged in the past 5 to 10 years, where the energy transition has become a very important geopolitical element, in particular with the rise of China and its strengths in manufacturing of all of these technologies, which we thought maybe that they were really European or North American. But in fact, it's really changing a lot of things. And if you listen to some of the rhetoric in the US right now, with the tariffs that you mentioned, that has massive implications on supply chains globally, because those tariffs, even though they're for the US, will have very big impact as to where the Chinese goods go to. And so they're going to go to Europe and go to other places. So I think the geopolitics of the energy transition is something that we all need to get a really strong grip around, because it's going to be, I think, increasingly important, probably as important as the more historical one that I mentioned.
What about in the insurance sector, Adrien?
The impact is very important, and the answer could seem counterintuitive because as a group we are mostly active in France, so one could say that geopolitics is very far away, but there are very significant impacts. First of all, simply because we are big institutional investors, so all the ups and downs of the global economy on stock prices, on interest rates, gives a lot of work, and the European framework is very protective to that extent. The second aspect is really feedback from the ground, is that when there are political tensions, cyber attacks rise to any companies. So we have, since the war in Ukraine, increasingly more attacks, cyber attacks, although we are only a French domestic player. But the most significant impact that we have now is the fact that due to geopolitical tensions, the progress to climate transition or climate adaptation is slowing down. Just to give you a figure, 10 years ago, natural catastrophes for the French insurance sector, it was 1 billion euro per year. Now it's 6. And of course, the origin of that is not only in France. It depends on many actions and many transitions throughout the world. So the insurance sector is always the first to face the consequences of a climate transition that is very dependent on geopolitical collaboration, and the time is not a collaborative time.
Maybe you could share des bons conseils, some, let's say, feedback from your own daily life on how business leaders today can develop corporate strategy, and how corporate leader in the audience maybe could collaborate more effectively, with regulators, partners, you name who, to create balance and predictable policies. Nicolas, do you want to start?
Yeah, sure, with pleasure. So I think just recognizing, it's again focusing on energy and the energy transition, just recognizing the importance of the time we're in and the fact that we really need to work collaboratively very, very strongly, very humbly, but also in very strong pragmatism, I think is key. And so we need to continue to find ways to work together. I shared the example of how we work with governments, whether at a national level or local level, to share our experience. Doing that with companies, whether it be through trade associations, industry associations, through think tanks, I think is key. What I'd love to see is more nimbleness, more agility, so that we have these good ideas that we can share more quickly and bring them out and share them with governments. Typically, these forums are forums of compromise. And who says compromise means takes time, and oftentimes you have watered down solutions, which is a little bit too bad. So that's what I'd love to see, more pragmatism and collaboration.
Mairead, what do you wish?
Yeah, the same thing actually. Companies have to get their voice at the table, and your company is large and probably more likely to be heard. But there's a big supply chain that goes behind you, and often, as I think of Canadian companies, it's actually getting them to participate in the dialogue and not just be a taker of regulation, but to actually indicate an advocate for the regulations that they need. So that they can actually get business done, and to show the impact of not having regulation at the right at the right time, or in too much regulation. So there's not a very public discourse around regulation. I mean, even I, when I was coming on the panel, was going, really? Like, we're going to talk about regulation?
Yeah, it's been like 40 minutes now.
Yeah, I was like, oh, so that's going to be a tough slog. And we work with regulators all the time. So you can imagine the public who are really not understanding just the implication of regulation, and we're in the middle of inflationary crisis in many parts of the world. So the consequences to the public of regulations are not well understood, and I think there needs to be a stronger public discourse, which then means companies need to engage differently with associations, with the public as they describe these challenges.
Adrien, do you agree? And give us a piece of advice, like how can corporate leaders collaborate more effectively with regulators and other players?
I agree with everything that has been said, but we also have to admit that it's not all the regulators' fault. And maybe we have been used to have a reactive approach to all what the regulator proposed, and maybe not enough in the anticipation. What I observe is that when you are a company or a sector and that you bring information of challenges that are coming, of impacts of regulation, the people from the regulatory bodies, they are always very interested in that. but the interaction stops because it's too late. This discussion should have occurred maybe 6 months, 1 year, or 2 years before. And I always tell my teams, but where was the origin of the reflection of the EU regulation? Where was the office where it all started? And this is what we have to find, and maybe in building more intimate connections with this sector. And the second thing, I find the EU regulation is now at a kind of crisis because we feel that there are two streams of regulation. One that is maybe derived, I would say, from the 90s, which is still in the free and fair competition, Europe as a market and only as a market. And that's what we have mostly in the insurance industry. And another one that is coming, that is well resumed by the Draghi and Letta report, is Europe as a sovereign economic force. And this contradiction between the two makes a lot in the absurdity of the EU regulation. And what we could do is foster the second approach at a political level, because when you talk to a regulator, you are at the technical level, people implementing a supposed political view on what France or what Europe is coming. And maybe we should be more active at this political level, because the world is changing. The views of yesterday are not the views of tomorrow. And companies have the legitimacy and they see the world changing, and they could be more influential on this aspect.
Interesting, those two streams, action, cooperation, and innovation to confront the unknown and a lot of regulation. Nicolas, maybe to conclude.
So maybe to just jump on what you just said, I think it's an excellent point. I think this geopolitical of the energy transition is particularly at play here when they talk about the competitiveness and just recognizing that there is this growing tension around different regional blocks. So I think that's very important, and it's a very good point. What was your last question? Sorry.
That was perfect. I wanted to maybe have a word. You just say, Adrien, it's not all the regulators' fault. Maybe we can talk about the GAFA and technology to find un coupable. Emerging technologies like AI or blockchain are outpacing regulation. How do your companies govern the adoption of such innovations responsibly? To finish, maybe Adrien to start.
You mean on the IT and digital innovation? Well, we are driven by our purpose. Is how this innovation help to close the protection gap. And as insurer, we know that you can close the protection gap only by pooling the risk. It's a collective approach. So digital is good if it fosters that, if it helps deciphering all the data, but it's bad if it conducts to more individualization in the treatment of risk. And it brings to the second aspect, which is very important for us in the adoption of innovation, is data ethics. So when someone goes to Aéma or one seed brand, he knows that we won't use its personal or private data for other purpose than building the coverage. And I think this subject will be key for tomorrow for proposing a protection solution, because it brings the question of trust between customers, civil society on one side, and the brands on the other.
Mairead, how is your organization approaching the use and the governance of these tools?
Yeah, I'll maybe start with, you have to separate the policy angles linked to digital, which garner all the headlines. So, digital taxes, cyber policy, government policy as it relates to digital players, from what businesses think about technology. And then you're back into the basics of what are the risks and what are the opportunities. So many businesses are looking to these new technologies, whether it's generative AI, as an example, to actually make their business more efficient, to use more efficiently the resources that they have in a resource-constrained world. So there's lots of opportunities. But of course, with any opportunities, there's risks. So it's how do you mitigate the downside of the risk? So I agree with you totally on data or on AI or any digital technology. It comes back to the risk of cyber, the risk of data protection, the risk of, privacy and breaching privacy regulations, which then links to trust in your customers. So you're really trying to mitigate those risks. So when we think about using those technologies, it's how do you balance that greater efficiency gain with mitigating the risks. And then it comes back to having appropriate policies, having appropriate controls in place to protect the data, to ensure against cyber attacks, to ensure that the code and is built in a way that is not biased and ethically correct, and that continues to be challenged. The one thing, and I guess we've spent a lot of time talking about regulation, the one thing you do is don't wait on the regulation, because it's going to come far too far in the future for when you actually need it. So you have to decide yourself what you're going to do to protect the company, to protect your customers, and to see how you can leverage the benefit of it, because your competition is as well.
Nicolas?
So in terms of using the technology itself, recognizing the importance of the technology, I mean, we are still in exploratory move. What's certain is that it has already improved all of our heavy modeling and in very noticeable ways, but we're still looking as to how to foster that technology as much as we can in our own business. That's one thing. The second thing is just recognizing for ENGIE, these actors, the GAFAM, are playing a very important role in changing the industry to some extent. They're changing the industry in terms of the energy and the electrification. I gave you an order of magnitude of the impact of the electric vehicles delay. We're talking about a similar size in terms of dozens of gigawatts, because in more than what we had anticipated, because of these of the electricity needed to power all of this AI revolution. And these actors, they want green energy, and they want the best quality green energy. So some of the innovations that we're doing in our industry, such as the 24/7 green power that they request, they don't just want a contract for green power. They want to make sure that at any moment we can have green electrons fueling their data centers and their needs. And that in itself is really helping the industry mature and something that we're going to increasingly be able to provide to others. So huge impact in terms of volumes, huge impact in terms of quality, and we're certainly looking as to partner with them and using their technology to improve what we do.
Thank you, Nicolas Lefevre-Marton, Chief Strategy Officer at ENGIE. Thank you, Mairead Lavery, President and CEO of EDC for Export Development Canada. And thank you, Adrien Couret, CEO of Aéma Group. It was a pleasure moderating this dynamic panel with you.